What's up, everybody? It's the Digital World Podcast, and here we see the 30-year bond chart. And the reason I'm pulling it up here is because we can't see it right now because the Fed is not publishing any of their data as the government is shut down right now. What's interesting here is that we've built like I've been telling you guys, we bottomed in like 2020. We've had a change, and we're up. Now, we've been ranging here for some time now. I'm not really or particularly concerned about any movements that may be happening um, in the short term. I'm thinking this is more long term, right, of where we're headed. And I think a lot of people are going to be in for a rude awakening when they realize that um, all of a sudden we have uh, higher rates going into the future. And so when you realize that that's the case, what does that mean for borrowing costs? What does that mean for your house, right? Is the price of your house going to decrease? Is it going to increase? Now, the more important question that you need to ask is what has happened in the last 40 years, right? And um, and secondly, based off what has happened, if we go in the opposite direction, will it have the same impact, right? And so those are the kinds of questions that we are trying to determine and get an answer to. Unfortunately, um, a lot of those questions um, will be you won't get an answer immediately. I think this is going to be a long um, it's going to be something that takes a long time to develop. And when something takes a long time to develop like that, you don't get those answers immediately. And so I think we're going to have to keep a very close perspective on this. But I think we are going to be seeing higher interest rates in the long term. And what that's going to do is bring down the price of your house. Now, in the short to medium term, that does not mean that the price of your house cannot go up, because there's a very real possibility that we see your home prices have another leg higher and get more expensive than they currently are, right? But in the long term, I think you'll see that you might have um, diminishing returns, right? Um, and so I think that's where we're at in this cycle. And when I look at mortgage rates, right, 6.3, um, this hasn't changed, right? As of 10/9, again, because data is not being published right now, so it's kind of at a standstill. But I think if you keep your eye on the global macro, actually not even global, if you keep your eye on the macro picture, right, here in the U.S., what are we seeing? And maybe can that point us to some clues of where we're going? And so here's this post by Craig, who um, goes and provides updates on the freight economy. And he says, if you want to know how the economy is actually doing, ignore retail sales or credit card consumption data. These data sources are distorted by inflation. After all, if a product is 5% more expensive than last year, it will look like you sold 5% more of the same product when your sales are actually flat. Freight volume data doesn't track the price of goods and therefore isn't distorted by inflation. It tracks the number of units shipped through the economy. If you sell more units of a product, you get more shipping. You sell less, you have less shipping. So you can't store freight. There are no inventory games being played in the data. Retailers play games with inventory and discounting to drive sales, but this also creates short-term distortions in consumer activity. Freight data doesn't have these distortions. Companies only move product around the economy if there is demand, and since freight data is upstream, Volumes in the freight market will reflect economic activity 6+ months in the future. So, freight is really important to look at. And if we are not seeing an increase in freight or movement of product or units, right, then the economy is basically flat. The sales can look higher, but doesn't mean that they're selling more. So I think what you're seeing right now is basically a flat line, or you can even say even a decrease, because a lot of people are not spending. They're kind of feeling the pinch. They're feeling what's kind of happening, and they're trying to prepare for what they feel like is coming in the future. And so when you look at charts like this, you can almost sense the impending doom of like, hey, this is going higher, right? Like if I this is only taking me to 1988, but if I take this further back, right, to like the 1980s, then I can see, wow, we've completely come down, and now there's clearly a trend shift. So got to keep that in mind as we progress, and know that, hey, that home of yours, in the long term, you could be seeing diminishing returns, right, and a decrease in price. But in the short term, there's a chance, right? It can go up. It can get a little more expensive, but it's worth monitoring and keeping tabs on. So that in mind, thank you for watching. Like and subscribe to the channel. It's the Digital World Podcast, and I'll see you in the next episode. Have a good one, everyone.